Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's time for Google's earnings, and what a day it's been today. Fantastic. The markets are pumping. I've trimmed using my tax lots, 12 shares of the S&P. I've freed up some money, sold them for a wash, so there's no profit or loss because I was buying on the way down. It's a way to time the bottom, and I'm looking forward to being able to buy them once again, 12 shares, when we get the announcement on the earnings, because we could expect some volatility. If we miss, even if we beat, there could be a sell-off going into the earnings. We're waiting. We're on standby for the earnings. Let me bring everything up. We're listing everywhere into Wall Street.
Data centers, one of the fastest growing areas. We talk about it obviously all the time, and I know you think about it all the time. You acquired Logic Monitor back in 18.
Nothing coming through just yet. We're on standby. Welcome to everybody. Charles is here. Good afternoon to you. Hope you're well. Please tap the like button, DJ Hayes. Thank you. Just from the super chats, it's got to be a beat. Yes, of course. Google is my boss. YouTube, is this live? Yes, it's live. As Zach Zay, are you in Silicon Valley today? Calling in from Google HQ. How long did it take Martyn to go from his 5,000 initial position to where he is now? Anyone know? Yes, I've been doing this 4 years. I lost 30,000 after the first year, and we're still overall down, but I've got invested now $370,000. It's been one hell of a journey. Evening all. If you become a member, Brandon, you can call in, ask me any question you want. You can do it live on the show. Evening all. These earnings could pump the tech sector. Come on, Google, let's go. I'm all in on SGOV. Val, I love it. He's talking to us. Isn't it wonderful? All right, we're on standby for the earnings. This is Google
no difference
earnings.
In your mind, if someone says,
still on
well,
standby
how does Robert Smith go from being a chemical engineer to the former...
The earnings call is just an hour away from when it starts, but we should get the figures any moment now. This will really set up the markets. We're keeping our eye on Google. So let's see what happens at 1.81. I don't know which way it's going to go. It's right on the line. If I show you the way it's actually looking, we've had a sideways action. It's very difficult to tell where this is going to go. I mean, it's a dead straight line right across the board. I don't know, and I don't know what the market will do and how it will react, if it beats or misses. Quite honestly, it's too close to tell. With all the uncertainty in tariffs, I don't know, but I've trimmed. I've got $12,000 on standby to buy more. This is my overall portfolio. We made 14 grand yesterday. Sorry, 2 days ago. We made 8 grand yesterday. We've made 6 grand today. Doing very, very well indeed. It's absolutely incredible. And this summer, we should be up all time from everything that we've been through over these last 4 years. But when I started 4 years ago, I had a handful of shares at this price. And now I've literally got millions at this price. So it's been digging the ditches, buying everything on the way down, buying the very bottom, and now we are just waiting for Google to report. Good evening, everybody. Tap the like button, share this out, and consider subscribing to the channel. We're keeping our eye on the news, all the media,
but may not have access to opportunity, irrespective of race or
Google
gender.
earnings
Part
to come in.
Part of our job is to make sure that we, as business owners and business managers,
could be any moment now. We are waiting. I'm checking all my feeds, and we've got some news today that Trump is talking to China. They're denying it. That's why the markets are up today. That's why I reported on it earlier today. If you missed the live stream today, I did also a special video, a full analysis on Mercedes-Benz. I hope you go and check that out later on. Okay. So if you're in the chat, let me know how many people are watching. I've got no idea. For some reason, I'm not even paying attention at the moment. What's going on? Tilray up 11%. Just breaking news there.
Whether it's in chemical...
All right, so I'll tell you what we'll do then. We want to get straight to 100 likes in the first few seconds. So, are you ready? Let's have some fun. Let's pump it up, pump it up, pump it up. Here we go. Let's do it. Everybody, here we go. Let's get 100 likes on the show straight out of the gate. There's 97 watching. We refresh the screen. 104 watching. There we go. 104 watching. Let's get 100 likes in the first minute. We are starting at 24. Okay, smash the like button, guys. Google earnings, YouTube earnings. My boss, it's time to go. Time to make some money. Smash the like button, everybody. And consider subscribing if you are new here. Cheers. If you want one of my mugs, here comes the link, martynlucasshop.com. Oh yeah, check it out. There it is. Cheers. Here we go. Tap the like button. Google earnings. 115 watching. And the stock is going up. Let's check the overall markets going up as well. Record-breaking days. I've just trimmed 12 shares of the S&P. How many people have liked now? Let's have a look. 100 likes. 105 watching. Let's refresh the screen. 24, 5, 4, 3, 2, 1. 42, we're halfway there. And the stock is moving. We're on the way up. Overall portfolio is up as well. $370,000. 330 plus 35. $370,000 now from $5,000. Here we go. Tap the like button. Da-da-da. 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 All right, here we go. In 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. How many have we got? 42 is now 50. Okay, that'll do for now. We're halfway there. Thank you ever so much. It's a very slow show today so far. Not to worry. I'm loving it, loving it, loving it. There you go. There's the Google earnings. Let's get ready to rock and roll. All right. I'm loving it. Now then, let's get ready. Who thinks it's going to beat? We've got a poll running. You can vote in the poll. 76% of you say beat. I have no idea if we're going to beat or miss. I honestly don't know. Let's go back to Wall Street. They're on a break. Of course they're on a break. They're always on a break. Or they're coming back. No, they're still on a break. Let's see what we got in the chat. Vaz, I thought about it. What's going on? Hello, everyone. Got my 100 on X today. Yay! Congratulations. That's a big deal. That's a really big deal. Everybody, we got Vaz, one of our broadcasters, myself, Vaz and Sensei. If we look here on my account, I only follow 3 people. Myself, my music channel, Sensei, and Vaz. And Vaz has just said he's just got his 100. Let's have a look. 103. He smashed it. Thank you very much, everybody, for following Vaz. Absolutely great. He does our EVTOL. Everybody go and check out Vaz. Here is my link to my X. Follow me, and when you're there, look at who I follow. It's Sensei and Vaz, and my music channel as well, because I have my other self. I've given you the link in the chat. There's my X and there's my Instagram. And then you click who I'm following. I only follow our broadcasters. And you will see who I'm following. And I'm following, whoopsie daisy, I've done something wrong. What have I done? Let me do that again. There we go. There you go. I am following. Hang on a minute, I'm messing this up. I'm thinking I'm not following the Hustle Brothers. How did that happen? All right, we'll try that again. Click on following. There you go. I'm following my music channel Sensei, and the EVTOL, which is Vaz. Go and check that out. Absolutely great. And he's just passed a magic number, 103. Let's see if we can get more than that. I'm going to refresh it now. Let's see if we got 104. Let's see if we got 104. I'll come back to that in a minute. I want to see it move to 104 just for the hell of it. All right, we're going up. I'm waiting to buy 12 shares of VU on the earnings if we get a little dip on the earnings. All right. What's 502? Samuel Redner, 502. What's 502? I have no idea what 502 is. The S&P VU. Are you talking about VU? How do you do? Yes, 502. Yeah. I'm looking to buy it back at 494. 12 shares of VU to lower my average and get back in again. And I'll be able to get an extra share. A free share is on the cards. Right, let's check in with Wall Street. Oh, I need to go and refresh the screen. We need to go and refresh the screen. So let's go and do that now. Here we go. Let's refresh the screen. Stand by. This is our update. Here it comes. And there we go. Good stuff. Okay. Let's bring it back in again.
We can help
there
you
we
see
go. We're waiting for the Google result. Any moment now. Google is going up, starting to move quickly now. Starting to move. Google starting to move. We want some volatility. I'm ready to buy more VU. 12 shares of VU. If we dip, at the moment we're going up and we're moving quickly. Any second now we'll get our results. So I'm ready to buy more on Google. Let me check all my links. Did Vaz get his 104? Yes, he did. Vaz, there's your 104. I told you would get you another one. There you go. 104. Thank you ever so much, everybody who just followed Vaz. Absolutely awesome. How cool is that? Thank you ever so much, everybody. I got extra. I got one more. And as I got one more, it went with you as well. That's what I love. That's what I want to see. Follow me and then follow Vaz and then Sensei. Absolutely brilliant. Okay, good. All righty. Let's get ready to rock and roll. Thank you, Eugene. You know who you are. You're following, engaging with everything. You're in to win the trophy this year for the Lucasade of the Year. All right, stand by. 14 grand just 2 days ago, 8 grand yesterday, 6 grand today. It's our 60 grand. I wanted it all in one day. I promised you it would come, but it's come over 3 days. We still haven't got our face-ripping rally, though. Still expecting a lot more from the market than this. I bought deep enough. I bought big enough. So I got a 60 grand day. It's just done it. No, it's doing it over 3 days, but that's okay. It's the same thing, isn't it, really? Let's go back to Google. Let's go back to Wall Street.
7800.
Still on a break.
Coventry Direct.
Okay.
Redefining
If you just come on in, tap the like button. We're trying to get to 100 likes, so YouTube share this stream out. Of course, we're talking about YouTube today, so everybody tap the like button. And we've got 148 watching. We're at 67. Once we get to 100, we will get suggested on YouTube. And we should get suggested on YouTube. We're covering YouTube Google earnings. I mean, flipping heck, seriously. All right.
Shipped in no time, and I switched from
Still
regular
waiting for the
flows to
numbers. Still waiting on the numbers. We're watching everything. I haven't got it yet. Stand by. The earning starts in 45 minutes. So we'll get it any second now. I'm really excited. Google it. That is one option.
Recaps and
That is one option. I'll give you that. So if you've not been around today, not been following my social media, I post everything that I'm doing on my socials to tell you when I'm trading, what's going on, who I'm speaking to, and everything. Look what I did. I told you that when I went off air, I would do this, and I did what I say, and I say what I do. Look, scroll down. There you go. I sold 12 shares of VU at 572. So basically 501, and we are now at 502. So it went up slightly. So I virtually got the top. And now I'm just waiting for it to pull back. We've had such good days that the chance of a pullback is more likely. It doesn't matter if we don't. It's just a very, very small trim. It's like not even 1% of my portfolio, but it's $6,000 back in margin. So I'm saving 4% over the year, but that doesn't matter. I've got enough to continue my growth to $1 million. The idea is to buy back 12 lower than 500. Ideally, lower than my all-time average would be absolutely fantastic. Remember, I don't buy any new shares above my average, but I can buy these above the average as long as it's below 500. So 495 would be a saving. That would improve my position tremendously. So that's what we'll do if I get that opportunity. If I don't get the opportunity, it doesn't matter. I can let it go and have patience because it might come next week or next month, but it will come. There will be another little dip there. And when it does, I will buy it. Even if I have to wait a year, it doesn't matter. The focus now is reducing margin. We've got enough to take us to $1 million. Let's check in on Wall Street.
Graduates, today
you are kidding me. They came back from a break and went for a break. I love American TV. We're going to go for a break now. 5 minutes of a break. They come back and say, we'll be right back in 2 minutes. What do you mean? You just came back from a break. Yeah, we're having another break now. Unreal. Can you imagine being on TV? I couldn't stand it. Shame, Zach, hello. Oh, Vaz, I thought about it. Smash the like button. Sweet mug man. Good afternoon, folks. What's that appellation? Yes, if you want one of my mugs, I've got mugs, glasses, hats, t-shirts, all that stuff with my logo. And you can get bundles. You can get free mugs. Oh, there's even a coffee stain. Even this one comes with a coffee stain. This one is very particular. Look at that there, look. Yeah, I just spilt a drip. Look at that. You can get all these mugs from the shop, martynlucasshop.com. Let me give you the link. There it is. If you bundle things together, you can get free mugs and t-shirts, and then you get 20% discount as well. All kinds of good stuff in the shop. All right, let's go back to the main position and check in on Wall Street. On a break, okay. Gets a bit embarrassing, doesn't it? Okay. Good afternoon, Saab. Welcome. If you want to be on the call, I know some of you like to tune in on the call, especially when they talk about YouTube. You know, they might mention me. I doubt it. They won't, but it'd be cool if they did, wouldn't it? Here is the link. Live video phone in. Live video phone in if you want to join me on the call. Many of you do like to do that. I enjoy it. We react to the earnings. Live video phone in. There you go. There is the link. And I've got a big special video coming out at the end, a world premiere, never seen before video coming out at the end of the earnings. I haven't posted it yet. I didn't want you to be overwhelmed with notifications, but that's coming up later after this. Really excited, really excited about my premiere tonight. It should be a really big one. It really should. So let's see how it does. I'm really quite excited about it. Vaz makes videos and he knows what it feels like to be excited about the next video.
So you can find your way to money.
My God, break after break after break. Double B and good news on new deals. Would expect owning 26 shares, says Mr. X. Margin, says Val. Catching Martyn up now. Yeah, yeah, you are. Yeah, you're getting there, mate. Only 3,900 to go. 3,000... In fact, 4,000 to go, actually. I'm nearly at 4,100. I'm just saying. Google is so integrated into our lives. Thanks for your support, everyone. Yeah, I just joined. When will they release it? Any second now. Tarko Zuni, welcome to you. Q1, 5:02 now. Yes. Hi, Alex. Lovely to have you here. When is the gold premier dollar video? When is the gold premier dollar video? What's that? What's a gold premier dollar video? Jerry, can you explain what that means? I've got no idea what the gold premier...
We're talking about people's money. I feel the weight of that, the responsibility.
Oh yes. I haven't recorded it yet because I was recording something else. Now I know what you mean. Yes, the dollar, yes. You will know when it's out because you'll be notified. made it, lost it, made it back. Now more careful with stop loss. Never use stop losses. The worst thing you can do is use stop losses. Stop losses are for people who don't know what they own. It's always a bad idea. It only makes money for the broker. It's there designed for the broker to get you to trade, get you to buy, get you to sell. They make money. Stop losses are for people that don't look after their stocks and they want the broker to sell for them. The only winner is the brokerage. Stop losses is not a good idea. You need to know what you own and you don't care what the price is. You understand what you own. Congratulations, Vaz, awesome. I just got my track pants on too. Did you notice that? That never happens, does it? Thanks, Saab. Love it. Followed. There you go. Walker wonders why I keep doing it, Martyn. What, you want me to show you your thing again? What's the difference between alphabet A and C? Voting rights. Makes no difference whatsoever. Voting C is the one you buy. The retail investor, it's voting rights.
Trouble breathing.
That's all it is.
Before taking Ibrance, tell your doctor.
If you want to call in, you have to let me know you're calling in. The phone line's open. You have to let me know you're calling in the chat. I won't pick up the phone to anybody unless you tell me you are calling in. If you want to call into the show, you've got to go in the chat and tell me on YouTube you are calling in. Very, very important. If you don't say you're calling in, I don't know you're calling in and won't pick up the phone to you. All right. Okay. Can always have some defensive stocks. Coke, J&J. Yes, always. So it could be a C is rising and A is crashing. No, they're both exactly the same. Makes no difference at all. Difference is voting rights. That's right. When the new Discord out, we're working on it now. You'll know when because it'll just suddenly change, and of course I'll make sure you know. So if you want to call in live to the show, you have to go into the chat and tell me you are calling in. All right, no point just calling in. I won't know who you are until you call in. Tell me in the chat. Okay, back to Wall Street. Have we got the numbers yet? Still on a break? Oh my God, it's like a permanent break for them today. Right. I get very frustrated with American TV. It's just always on a break. Right. WWW, voting rights, that's correct. Do you see another dip for NVIDIA? I don't know right now. We know that China is now talking to the US. That's why everything's surging today. And that's why I sold 12 shares of the S&P. Is there a massive problem with owning fractional shares? If you want to call in, let me know in the chat you are calling in. Is there a massive problem with owning fractional Google? No, there's no problem at all. New to investing, about 401k manager. I got VU at 478. Yes, very nice indeed. Congratulations to you. The phone line's open. If you want to call into the show, you have to let me know you're calling in the chat. Good evening, Martyn. Google is more than a search engine. Of course it is. Almost sounds like they're on the island time. Never use that nonsense stop loss. No. Using stop losses is when you don't know what you own and it will trip you out at the wrong time. It's there to make money for the brokerage. That's all it is. Never use that nonsense stop loss. No. Brandon Vo, over 220 to 30 years is a good buy no matter what. This could be 3 days in a row. The S&P gained over 2%. I can't remember that happening before. No, it's been quite incredible, hasn't it? It's been quite incredible. That's what happens when you force a downturn. It's not it was the fastest downturn in history. Hello, Lucas Aids. Thank you, Saab. Welcome, everybody. All right, we're on standby for Google's numbers.
We thought it was going to be more benign than we have right now. At some point, hope has got to hand off to confidence.
There's a live video call in the chat. If you want to call in, let me know.
Turn into something
and you can join me on the call.
You're resilient. I will say one difference today. It's very much a tech-led situation.
We're on standby. My portfolio is exploding. 14 grand yesterday.
Really powering the index move.
Steve Kovac, T-Mobile, what should we look for?
$8,000.
Yeah, Scott, this might actually
yesterday,
give us a
14
good
grand the
read
day
ahead
before,
of Apple's earnings,
and
which is a week
6
from today.
grand
Also, just
today.
consumer sentiment in
Absolutely
general.
mental.
Let me go back to a rival of T-Mobile. So this week we heard from Verizon CEO Hans Vestager on his earnings call saying the company's not going to cover price increases on smartphones.
We're
in his
waiting
words,
for the numbers.
That's just
Stand
not
by.
going to be possible.
The
We
call
know
starts in half
love
an
to
hour.
give those big subsidies to phones to get new customers on their plans or take them from another rival carrier. Also, you want to look out for commentary on pull-forward demand this spring from smartphones and other devices.
If you want to join me on the call, the video link is in the chat. You can be on the call with me.
Late March, so we'll see.
Let me know you're calling in. It's for members
saying.
only. I think we are open to general public at the moment, aren't we? I think we're open to subscriber mode. We will go back to members only in a second when it gets busy. The Trump effect. Stop loss is my brother. Do you use it with a system or a random number you're willing to lose? No, I would. Calling stop loss your brother is not a good financial term. I wouldn't do that at all. I think it's a very bad idea looking at a stop loss like that, but everyone does their own thing. I certainly wouldn't do that. I think it's going to miss, and it will plummet the US economy into a recession, and we'll release. No, that's silly. Okay, we're not gonna put those comments on the screen. That's just a silly comment. If we get any silly comments like that, we'll just go to members only mode. In fact, we'll go to members only mode. If we're going to have trolls coming in talking silly, we ain't got time for that. We got big investors here making serious money, and we don't want to be wasting time talking to people talking nonsense. Right. Yes, Google owns a lot of things. Right. It does indeed.
Allocates capital, whether it's going to get a return on all of its investments, and obviously the breakup.
Stand by for Google numbers
and all the rest of it.
We got 1 minute before the bell.
Really, whether search is going to be as resilient as we've come to learn it to be.
Jonathan,
stock is
calling in. Okay, Jonathan.
To the market, but maybe that's what happens.
Okay, Jonathan, I can let you on the show now. You've got to let me know you're calling in.
For whether the market's going to start to
There's Jonathan.
Jonathan,
I'm going to come to you very, very quickly.
We'll see about that.
Stand by.
We've done some work.
Here we go. Jonathan, welcome to you. Good afternoon. How are you?
Yeah, I'm good, thank you, Martin. How are you doing?
I am well. It's lovely to have you on the show. I'll come back to you in a second. We're 30 seconds away from ringing the bell, but I will come back to you. You can join me for the call. Where are you calling in from?
UK. Yeah, I live in Lincolnshire.
Well, lovely stuff. I've performed all over the UK, so it's lovely to have you here. Welcome to the show. I'll be right back with you just after the bell, and once we get the numbers. Stand by. Thank you for calling in. Absolutely wonderful. There is Jonathan calling in on the show. All right, here we go. The bell is just 15 seconds to go.
The overall AI theme,
15,
as you would imagine.
14.
The Mag 7 has gone from 34% of the
Waiting for the numbers on Google.
Down to like 29.
Stand by.
That's still really high historically, but it's interesting. It does show you that
4,
if you look at the frequency of mentions in
2, 1.
Is way down, of course. Tariffs are way up. So we'll see if it can change the subject. The market's been looking for the opportunity.
We're looking for the numbers. If I get a drop, I'm buying 12 shares of the S&P.
Maybe so.
Good stuff, Mike. Thank you. That's Mike Santelli. Bell's going to ring us green.
Google's up. Google's up.
Earnings are looming in overtime to Morgan and John.
Google is up. Wait on the numbers.
That's the end of regulation. Vista Equity Partners ringing the closing bell at the New York Stock Exchange. NASDAQ Inc. doing the honors at the NASDAQ. Well, stocks going out near the highs.
Here we go.
Another rally. Has a strong week for the major averages. Gains momentum. S&P finishing up about 2%.
Oh,
That's the
it's running.
On Wall Street. But the action's just getting started. Welcome to Closing Bell Overtime. I'm Morgan Brennan along with John Ford.
And it's another huge hour of earnings reports on the way.
We're on standby. I'm covering
Mag
it.
7 name to give results that Google parent Alphabet, along with Intel, Gilead, T-Mobile, and more.
We're on standby for earnings. The earnings call starts in 29 minutes.
Sievert, this is his first comments before talking to Wall Street analysts on the call later.
Okie dokie.
And as we await those earnings,
I'll keep my eye on this.
Today's market action.
And what I'm going to do is I'm going to switch over to my backup stream while I bring my guest on the show.
CNBC contributor Victoria Green. It's great to have you
very
both
exciting.
Here
Awaiting Alphabet. I'm excited. Aren't you all excited about this? It's amazing. So I'm going to keep my backup stream just there. And the moment I get the numbers, I can bring it to you.
8%. It looks like tech is really in the driver's seat right now. Does that?
If you are calling in, you have to let me know. Or Joseph wants to call in as well. Let me put you in spot number 2. Brilliant stuff. Joseph, I'll come to you in a moment. We're waiting for the call. My flipping portfolio is exploding again. Oh, there we go. Let me come to... oh, blimey. There we go. It's going now. Let me go to Jonathan. How are you? Are you excited about Google tonight? Are you investing in Google?
I'm not investing in Google, but I'm invested heavily in the tech sector. I've got about 80% of my portfolio in the tech sector. So if Google does well, I think it's going to be very good news for the rest of the earnings season for the big tech companies. So it's going to be good.
Absolutely. This is fantastic. Are you going to join me for the call tonight? Stay on with the call.
Yeah, I think I will do. Yeah,
awesome. Did you have a particular question as I'm watching watching everything? Oh, hang on. I'll come back to you. Sorry. We got the Intel results. Here we go. Stand by. Number 1. First one in.
17.5 billion to 17 billion. So that would include workforce reductions, though there was no specific headcount target. Despite that 20% number that was reported just a few days ago, they said that they don't have a number just yet. CEO Lip Bhutan has been in the role for about 5 weeks and plans to streamline management layers across the organization. Intel CFO said they remain committed to the foundry business while planning to cut non-core products. Could be anywhere between 10 and 15 products.
That's 35 grand I've made in 3 days.
Shares are a little negative, down 1%.
Yeah, fractionally interesting. The CFO also telling us for 2026 they're targeting.
And we're watching Google. Let me see if I've got the numbers. We're talking Intel.
I noted that's about 10%.
The call starts in 27 minutes.
They were before. Asked if that reflected the headcount, and as you mentioned, he said they don't have a headcount number yet. So a lot to learn on the call, and a lot more to learn that won't be on the call because they don't know that yet.
Yeah. Meantime, shares of Intel are falling right now down about 3%. We're going to bring Mike Santoli into our market conversation as well. I'd also just note that Alphabet
very good.
We're going through those results. We'll bring them to you momentarily. Barb, I'm going to go back to you, and I'm going to caveat it with, we might be getting ready to interrupt you now for Alphabet.
Yes.
Okay, and never mind. We're going to Deirdre Bosa first for Alphabet. Hi,
Go.
Hey, I do have the Alphabet numbers, and stock is surging after hours, up nearly 6.5%. It is a beat on both the top and bottom lines. EPS coming in at $2.81. That is well above the $2.01 that was expected. Revenue also.
That's because of all the super chats and the membership. On YouTube, folks.
89.1 was expected. I also just want to separate out Google search and other revenue. This is important because it's been exposed to Chinese e-commerce and the tariffs, as well as the switch to generative AI chatbots. That is coming in in line.
How are you feeling, Jonathan? Thumbs up, mate. Thumbs up.
Was expected, so perhaps a relief from some investors who were worried that its market share, its ad revenue was going to be eaten away by this
getting
move
rich
to generative
tonight, folks.
AI. Last one I want to give you guys, cloud revenue coming in line, 12.3 billion. That was expected. I'll continue to dig through these numbers and just keep in mind that we do not get specific or official guidance, but we will get some color.
That'll
on the
do
call,
for me. That's all we needed, the top and the bottom. So it's a nice beat. Okay. And we've got the call coming up. So now we've got this is fantastic, guys. We've got 2 guests now joining us tonight. If you want to call in, the links in the chat. So I'm going to put Jonathan in now spot number 8, and Joseph, you're in spot number 9. Let me bring you on the screen. Welcome our panel in tonight. I've got to just jiggle around Joseph. It looks a little bit. Let me just zoom him in a little bit. There he is. Joseph, good evening to you. You're a bit in the dark there, mate. If you can put some lights on, it'd be cool. Let me bring...
One second.
Okay, mate, you take your time. Let me just line up Jonathan. There you go, looking good. Hey, you're invested in tech, mate. You must feel good tonight.
Yeah, very good tonight. I'm just watching my portfolio at the moment, and I've made a little bit of a gain, 0.5% just off that. So it's looking good. It's looking good overall.
Very, very nice indeed. I've been buying heavily. How long? How long have you been following the show? I see you've got a new badge, so you're quite new, I think.
Yeah. So I followed about January time, and I became a member a couple of weeks ago.
Okay.
Yeah, I just want to thank you, Martyn, to be honest, because it was your conviction after the big tank that came down after the tariffs were introduced. I went all in with you, same time.
You did.
And and it's paid off pretty well so far.
It's paid off,
thank you
mate.
so much for the conviction.
You're absolutely welcome. I cannot believe how much I'm actually in. When I look at it, it's like about sort of 5 times what I paid for my first home. That's how much I've used margin to get in. So this is fantastic. I'm very, very excited. And I trimmed a little bit today using tax lots. Did you see my winning video explaining how to do? Yeah, just a trim, because I've got enough to take me to the $1 million. I don't need any more shares now. So just bring that margin down, start clearing that off. But at the same time, keeping 99% of my shares in play, just bringing my margin back into balance to that sort of 45, 50% buffer. And we're very likely to get that little pullback. It's only a couple of percent. Get that pullback, buy them lower, and then it will just go up again. So if not, let them go. It doesn't really matter. Joseph, how do you feel? We've got 20 minutes before the call. I'm up nearly like 36 grand in 3 days. How are you feeling? How's it treating you?
I like it. I do. It helps my crypto a lot, and I need that right now in certain aspects. In certain ones.
Good.
Because this is huge.
Indeed.
The thing that I was going to ask you
was.
I did a comparison with the S&P 500 and like XRP for this year.
Right.
And it said that S&P was down like 14-point-something% and XRP's up 2.4%.
Mm-hmm.
But you buy on the dips when it drops.
Big time.
So how are you calculating your percentage and your wins? Like how much are you up? You're not up. You're not down 14% like the average from January 1st to today. You're different. How do you calculate that?
Okay, I will go through all that with you in a few moments. So just stand by. I'll answer all that. Got lots of things to do at once, so I will come back and answer your question. I think we got Saab calling in as well. Saab wants to go into spot 7. Let me drop Saab in spot 7. Lovely to have you here. Saab, are you all right, mate? Are you happy tonight? I bet you are, right?
Hey, it's all good news. We were expecting Google's going to kill it. It's time for Google to kill it again. And
if you want to know if Google is going to do well on earnings, who'd you ask? A YouTuber. How do I know? Because my earnings revenue, my CPM is going up. I can tell you when YouTube are making money before YouTube know themselves, because my ad revenue goes up, which is the cost per thousand what advertisers are paying to advertise on my channel. So I've never been wrong on this. You want to know if YouTube are making money? I can tell you. Just ask me.
YouTube have just bypassed Netflix on most views.
Oh, have they?
Yeah.
Do you reckon that's because of our channel? I reckon it is, don't you?
Absolutely.
Yeah. Nothing else comes close. Stand by, everybody. If you want to call in, join the team. We've got Saab, Jonathan, and Joseph calling in from around the world. It's a big, big night. We got to just under 20 minutes to go before the call starts. And then we have a big, big, very important video after. It's a world premiere. You've all got to watch about the pop, about the bubble of the S&P 500. I'm being very serious when I say that. This is why I'm trimming. You've got to manage your money. Why do you think Warren Buffett took some profit off the table? He's still all in with equities, but he trimmed his position. He's still got more equities than cash, but just remind yourself, he trimmed for a reason, and you need to understand that. Don't just keep thinking it's time to buy. This is not the time to buy. This is the time to hold. I've done the big buying a few weeks ago. Now we don't do anything. Warren Buffett can go years before he buys again. When it's down, he buys big and then waits. Right, I'm going to be able to answer Joseph's question now because we've got 10 minutes to go. Let me make sure that we've got everybody in. We are on members-only mode for the moment. Right, there's 312. I want 150 likes, and then I'm going to go to Joseph's question and explain exactly what he's asking to him. So, everyone, tap the like button. I want 150 likes, and then I'm going to explain my full position to Joseph, and it'll benefit everybody else who wants to know exactly my ups, my downs, my ins, my outs, and everything else. So let's get it going. Everybody, here we go. Tap the like button. I want 150 likes. Let's rock and roll in. Here we go. We've got 322. There you go, right there. So 150 likes should be done in 1 minute. Share it out on YouTube. Here we go. Boom, 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 boom. So YouTube earnings, we got to do it. 50 likes in 5, 4, 3, 2, 1. Over 100, let's go. 109, 109, 110. Come on, everybody, smash the like button. Consider subscribing if you want to support our channel. That would be great. Let's go, go, go. 116, 116. We're on the way. How many people watching? 77,722 subscribers. I'm loving it. We've got 27,000 views in the last 48 hours. I'm loving that as well. And what are we up to now? 123. 27 to go. And then we will answer Joseph's question. Let's go, 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 go. Rocking and rolling, everybody. What a day it's been. 3 days of up, up, up and away. I hope you're all making money. We're all making money. $17 likes to go. 14 likes to go. And tonight, we're going to the moon. I'm loving it. 11 likes to go. We're nearly there. And our favorite crypto, of course, on the channel here is XRP. We love it. No more stress now, though. Three likes to go. We're doing it. We're doing it. Here it goes. 1 like to go in 5, 4, 3, 2, 1. One more like. And come on, come on, come on, come on, come on. 150 in 3, 2, 1. Let's go, 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 go. Come on, everybody. There it is. There it is. I'm loving it, loving it, loving it. Thank you, everybody, so much indeed. There we go. All right, good, good, good. Okay, now I've got time to answer a question here from Joseph. So let me bring you back here and get rid of Mr. Mini-Me. We've got exactly 15 minutes from the call. The call is on YouTube, of course, because they like to get a bit of ad revenue, just like I do. So there's our Google earnings waiting to go live. And very, very exciting. Google have only got 1,301 people in Google on YouTube watching their channel. We've got nearly 300. How about that? Right. Let me go back to Joseph now. He asked me a question. Now, Joseph, you wanted to know exactly. Let me just show you my overall position and then I can break down what you were saying. So if I go to my live position, as you can see, I'm up 1.23 on the hour. The day, I'm up 5.52. On the week, I'm up 9.46. It's about 35 from the trough to peak, from underneath there to the top. On the month, we're still down at 6.30. On the 3 months, we're down 14.19. Year to date, we're down 9.62. And our year is just about flat now, 1.13. And overall, we were down over 60 grand, originally coming from our 30 grand down on with Virgin Galactic, and we are now down $34,000. You can see how that's massively picked up in the last few days, and that's because, and now I'll explain it in detail why it looks like that. So we started this journey 4 years ago, Joseph. I had $5,000, started my show, and I started to do what I was doing. I started to put some money in. Once I started earning money on YouTube, I started putting money in about a year and a half later. The first year was free. I didn't earn any money at all. And then I lost over $30,000 on Virgin Galactic. Now, I didn't have to lose. I lost kind of not on purpose, but when I was down, I sold everything when I was down. because about 14 months ago, last January was my lowest point. Not this January gone, the January before. 14 months ago, I was about $35,000 down. And I could have waited a few months, but I decided I wanted to stop that journey. We ended the show. It was no longer Martyn Lucas, the day trader. It was Martyn Lucas, investor. And I went all in on the S&P. And even though I sold everything for a loss and used all that money I had to just buy the S&P or whatever price it was, I just bought it all in at that point and started again. I rebalanced my portfolio. So I was down. I was coming from a place of 35 grand down at that point. So all the money I'd earned over that year, I'd lost. The money I'd earned on YouTube, I'd lost, and I was down. But I hadn't exited it. I hadn't sold. I hadn't got out. I just sold my my Virgin Galactic and Virgin Orbit and bought the S&P and basically started again, renamed the show, and it was about being an investor. I went through a year and a half of pain and learning what it was like to experience margin call. I had a margin call once. People saw me cry on the show and it was horrible. Learned what it felt like to be down over and over again. And it was the best time because now I understand the market and all the rest of it. And then I started again. So I'm coming from a place of already starting at 35. Now I could have waited. There was no reason for me to sell when I was down. When I got margin called, it was like by $1. I just sold a share and I was back up again. It wasn't a real margin call. I just sat on the line and I wanted to stop this and rebalance everything. So I could have waited and got all my money back because it all came back. However, I wanted to start from scratch at this moment. Very much like when I declared bankruptcy about 30 years ago. Technically, I was my credit score was perfect. I'd never missed a bill, but I knew because of the credit crunch from America, the way it affected the UK businesses with the theatres, I was never going to catch up with the amount of debt that we had, even though I'd never missed a bill. And the bank said, why are you going to declare yourself bankrupt? You don't need to. You've never missed a bill. I said, but I'm going to be bankrupt. There's no way I'll ever catch this up. There's no one going to the theatre, and no one did for the next year to 18 months. So I did the same thing then. I cut it off, pulled the plaster off, and started going on the right path. There's no point burying your head in the sand thinking I can work my way out of this. I couldn't. I had to just start again and go for it. And that's what I did. I learned, so I got that discipline to do this with this. I thought, I want to start doing what I want to do now, not wait 6 months for the stock to come back. I want to be all in on the S&P. We're now media. And when I spoke to my CEOs, they said, we'd love to be on the show, but they preferred the idea of a media channel rather than a pump and dump YouTuber promoting stock and so on. So there were those two reasons why I decided to just sell for a loss, get out, restart again. So I've come from a really bad place. And then, of course, I kept buying on the way up, the S&P. That was great. And then we had this big dip. But now I've earned more money. I've built up more credit with Robinhood. I've got more credit because I've earned more money. I was able to borrow more money because the more you put in, the more you can borrow on margin. I refinanced. I got extra money there at a lower rate than what Robinhood offers at 4%. So I was able to use a lot more margin, put a lot more money in, and that's what I've been doing. I've been going all in big time when everything was down because now I recognize what value is about. It's not about the stock price. It's not about the price action. It's about conviction and knowing when something's undervalued. And with everything, I mean, and you don't need to give me you don't need to me to give you the list of the CPI, the PPI, the data, all the reasons why I believe the S&P was oversold and down. That's why, as it went down, I bought more and more and more. So I said to everybody, when it starts to go up, it's going to go up very quickly, and that 60 grand, which it was now in total after all of that dip, this is going to come back very quickly. And I said to you guys, I would have a 60 grand day in one day, and we've had 35 grand in 3. So there it is. So it's going to come back, and I would imagine by the summer, I will be, just a couple of months from now, I will be up all time. And that will be amazing because I've never felt that. And when I announced that yesterday, I saw Saab's face. He smiled because he knows what that must feel like. I'm sure Saab understands. I've never felt it yet. So I've never been up all. I'm up on my Roth IRA because I started that a year later, and I do that just with the S&P. That's up all time. It's up month, week, day, year, the whole lot. But the overall brokerage is down. Does that answer all your questions?
Yes, because I was trying to explain this to my brother. I was like, hey, man, this is the guy I follow. He went in the S&P 500 with $5,000, and in 4 years, he has all this money.
Mm-hmm.
And he buys when everything's crashing.
Mm-hmm.
That's when you buy. You don't buy when everyone else is buying and saying, yeah, it's going to the moon. You know, you're gonna lose everything. And he's like, well, I can't do that. You know, I was like, hey, just stop. Just take a break.
Yep.
Put in money now and wait.
Yeah.
You know, I would like to get him a subscription with you, and I just need his information to give to you. I'll pay for it monthly so he can learn this when he's sitting doing his job. You know, he's a security guard and he has a lot of time on his phone, and I want him to see what you're doing and explain. You know how to explain it. I don't. And
I try.
Needs help. He needs help, a lot of help.
Well, I'm more than happy to help anyone. He can call in and we can be on the show just like you. I can answer any question for him, go for his portfolio. But this is my strategy is a long-term strategy. I've got an income. I don't need to retire tomorrow. So my job now, and some people will my critics and my, people that troll me or whatever will say he's overall down. He's telling everybody he's winning all the time. Well, since I rebalanced my portfolio, I've done 24 trades, 24th trade today, and won. I've won every single time. I've learned the lessons first. So yes, I've won every single time. They go, no, he's down overall. Look, he's down. He never shows anybody. Well, I just did. I always do. If you ask me, it's just, I just show you. But it doesn't matter. I'm down. Like I used the comment, Warren Buffett gets asked, what's it feel like to be millions of shares down? Sorry, millions of dollars down in a day. It doesn't matter. I've not sold. I'm not out of the game. My job now, over the next year, 2 years, before I need the money in 20 years, is one thing and one thing alone. Acquire as much stock under value as possible. That's it. It's why today I'm waiting for it to dip below 494. I'm not going to buy it above that now, because I've got enough shares to get me to $1 million. My focus now is just to earn money, pay down the margin, and if I get a dip, which can easily come during the earnings call tonight, I will buy some more with what I trimmed off today. But my job now is to acquire more stock, not to focus on the stock price, not to worry about I'm down overall. That's not important. What's important is 4 years ago, I had 0 shares of the S&P 500. I had a few shares of Virgin. Now I've got these 700 shares of the S&P at a price that is the average of a year ago. That's what's important. Acquiring more stock at lower prices back a year. And so it doesn't matter that I'm down, because I made 35 grand in a day, in 3 days, without options, without shorts, without crypto, without anything, just by holding and trimming at the required time. We've got 6 minutes to go. I think Zach Zate is calling in. He wants to join the party. If any of my panel have a question, you've got 6 minutes. Please feel free to ask anything.
So just quickly there, Joseph, I think, the hardest thing is to convince family members usually and close friends about what you're doing with their money. So the best thing to do is to lead them to someone that's doing really well. And like you said, you have a perfect plan. You'll pay for his membership and everything like that, and just let him go on. I think that's a fantastic idea, because nobody ever believed me about nothing.
Do you know, it's a very true thing. Me and Leah often joke about it. Me and Leah, my wife, have different strategies of investing and saving. That she doesn't take any of my ideas at all. I've got 78,000 people who join me every day who seem to enjoy what I have to say. Why don't you do any of these things? I said, if I tell people online that, like I just did, what's going to happen to my channel? She said, well, I just got a different... Leah likes to keep money in the bank. I'm not like most of you. I don't believe in money in the bank at all. And I've explained the reason why I don't believe in it. We have different ideas, but that's what makes us a perfect couple, right? So yeah, families and loved ones, they're not going to agree with the word you say.
Leah.
Do what, mate?
I'm 100% with Leah.
What? Don't listen to a word I say. Why are you watching then?
I watch because when you invest, just like you said, all your money is in your investment. but for 99% of the viewer, because that's your business and that's your job, and we love your show and we love follow you. But if people that live their life and they have more in their bank account than their investments, they will feel great.
Absolutely. It's not right for me, and it's not right or wrong for them. It's what's right for you. Whatever works for you. You know, there's not a right and wrong way of doing it. If you're happy, and most importantly, whatever you do, if it motivates you to keep doing something in the right direction, that's what's important. If you never invest at all, and all you do is go to work and put it in the bank, but it motivates you to get up in the morning and go to work because you see your bank balance keep going up. Yes, overall, inflation, you're missing out and it's being degraded every year and you could have done better. But if seeing your money grow in the bank gets you out of bed in the morning and makes you go to work and do whatever you do, then that's right for you. Because at the end of the day, it doesn't matter what you could have had, should have had, you could have made more money if you'd done this. What matters is what you've got. And whatever motivates you to do the right thing for you is the right thing for you. And no one should ever criticize. My job is to share my opinions. You share yours. We discuss it. Then you all go and make your own decisions. There are many people who have said, I would not have used margin. I wouldn't have borrowed money. Well, clearly it worked. It worked for me. It might not have worked for you. But like I've said before, you have to have income and a strategy and a discipline. And I'm watching it all day. If you're just using margin and then just leaving your phone, under the bed for 6 weeks, then coming back, you got a margin call. That's not going to work. If you don't have any money, you're using the stock market as a cash machine. That's not going to work. So everyone's position is different, and you should never criticize or anyone. Everyone does it their own way, and that's what the power of the family is. We all do it our own way. We all share ideas, and then we formulate our own ideas for us, and then that works for you. And
Correct. But the income comes to your bank, not to your investment. So everybody get their income to the bank, and their job is to maneuver it where to go. Part for taxes, part for vacation, part for investments, and they still need to have money in the bank. Most of the people.
Yeah. Not me. I've not had any money in the bank for 4 years, and clearly I'm doing all right. So
you're special, different, and you are special, different, and we all see you and showing your specialty.
I've got to cut you. Thank you. I've got to cut you off. We are 1 minute to go. YouTube is about to start its presentation. This is what you get with Google earnings. They play a video first. This is nothing. This is just a bit of music all about nothing you need to know about. But in a few moments' time, Google will start and we'll pick up the call in about the next 30 seconds. They're going to be on time because that's the way they work. They're very efficient like that. So let me unmute it.
Million career certificate.
There you go. It's just playing music. So I'll just keep that muted just for a moment. I'll just turn off the background audio and we'll just turn that off down there just for the moment. Right. You can't hear that? Okay, I'll just keep it turned down so we don't miss anything. And I'll bring you the call as soon as it begins. So let me go to our main portfolio. We've not had a dip yet. That's okay. If we don't get the dip, we don't buy those extra 12 shares back. It might come tomorrow, next week, middle of the night. I'll set a buy order for $1 under my average. And if it comes, it comes. If it doesn't, it doesn't. But I wouldn't be surprised if we get a little bit of trimming after this amount of gains. Anyway, stand by everybody. Give me your reactions on the call when you hear what they have to say. It's all about guidance at the end of the day. What comes next? Got to make sure I've muted that. I'm playing some background music here, being a bit sloppy with my production. Anyway, come on, Google, do your thing. We're just waiting for the call to begin. They're playing some music at the moment. We're 1 minute in. I gave them a good build-up, saying they'll be on time, and we're 1 minute late now, but never mind. Let's hear tonight if they mention my YouTube channel.
Alphabet first quarter 2024 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Senior Director of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's first quarter 2025 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Anat Ashkenazi. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thanks, Jim. Good afternoon, everyone. We are pleased with our strong results this quarter. We continue to see healthy growth and momentum across the business, including AI powering new features. In Search, we saw continued double-digit revenue growth. AI Overviews is going very well with over 1.5 billion users per month, and we are excited by the early positive reaction to AI Mode. There's a lot more to come ahead. In subscriptions, we surpassed 270 million subscriptions with YouTube and Google One as key drivers. And cloud grew rapidly with significant demand for our solutions, and you saw our leadership in AI at Cloud Next across infrastructure, agents, and more. Our differentiated full-stack approach to AI continues to be central to our growth. This quarter was super exciting as we rolled out Gemini 2.5, our most intelligent AI model, which is achieving breakthroughs in performance, and it's widely recognized as the best model in the industry. That's an extraordinary foundation for our future innovation, and we are focused on bringing this to people and customers everywhere. Looking ahead to I/O, Brandcast, and Google Marketing Live, I can't wait for our teams to showcase the innovations they've been working on. Turning to our AI progress this quarter, which continues to enable significant growth opportunities. The elements of the AI stack I've previously mentioned are AI infrastructure, world-class research, including models and tooling, and our products and platforms. Starting with AI infrastructure, our long-term investments in our global network have positioned us well. Google's network is robust and resilient, supported by over 2 million miles of fiber and 33 subsea cables. Complementing this, we offer the industry's widest range of TPUs and GPUs and continue to invest in next-generation capabilities. Ironwood, our 7th-generation TPU and most powerful to date, is the first designed specifically for inference at scale. It delivers more than 10x improvement in compute power over a recent high-performance TPU while being nearly twice as power efficient. A strong relationship with NVIDIA continues to be a key advantage for us and our customers. We were the first cloud provider to offer NVIDIA's groundbreaking B200 and GB200 Blackwell GPUs, and will be offering their next-generation Vera Rubin GPUs.
That was great to mention that.
Second, this infrastructure powers our world-class research, including our industry-leading models.
Mention NVIDIA.
We released Gemini 2.5 Pro last month, receiving extremely positive feedback from both developers and consumers. 2.5 Pro is state-of-the-art on a wide range of benchmarks and debuted at #1 on the chatbot arena by a significant margin. 2.5 Pro achieved big leaps in reasoning, coding, science, and math capabilities, opening up new possibilities for developers and customers. Active users in AI Studio and Gemini API have grown over 200% since the beginning of the year. And last week, we introduced 2.5 Flash, which enables developers to optimize quality and cost. Our latest image and video generation models, Imagen 3 and Veo 2, are rolling out broadly and are powering incredible creativity. Turning to open models, we launched Gemma 3 last month, delivering state-of-the-art performance for its size. Gemma models have been downloaded more than 140 million times. Lastly, we are developing AI models in new areas where there's enormous opportunity. For example, our new Gemini robotics models. And in health, we launched AI Co-Scientist, a multi-agent AI research system, while AlphaFold has now been used by over 2.5 million researchers. Third, turning to products and platforms. All 15 of our products with 500 million users now use Gemini models. Android and Pixel are two examples of how we are putting the best AI in people's hands, making it super easy to use AI for a wide range of tasks, just by using their camera, voice, or taking a screenshot. We are upgrading Google Assistant on mobile devices to Gemini, and later this year, we'll upgrade tablets, cars, and devices that connect to your phone, such as headphones and watches. The Pixel 9a launched to very strong reviews, providing the best of Google's AI offerings like Gemini Live and AI-powered camera features. And Gemini Live camera and screen sharing is now rolling out to all Android devices, including Pixel and Samsung S25. Now moving on to key highlights from across Search, Cloud, YouTube, and Whimo. First, Search. AI is one of the most revolutionary technologies for enabling and expanding our information mission. And for Search, we see it growing the number and types of questions we can answer. We are already seeing this with AI Overviews, which now has more than 1.5 billion users every month. Nearly a year after we launched AI Overviews in the US, we continue to see that usage growth is increasing as people learn that search is more useful for more of their queries. So we are leaning in heavily here, continuing to roll the feature out in new countries to more users and to more queries. Building on the positive feedback for AI Overviews, in March we released AI Mode, an experiment in labs. It expands what AI Overviews can do with more advanced reasoning, thinking, and multimodal capabilities to help with questions that need further exploration and comparisons. On average, AI Mode queries are twice as long as traditional search queries. We're getting really positive feedback from early users about its design, fast response time, and ability to understand complex, nuanced questions. We also continue to see significant growth in multimodal queries. Circle to Search is now available on more than 250 million devices, with usage increasing nearly 40% this quarter. And monthly visual searches with Lens have increased by 5 billion since October. Moving on to Cloud. At Cloud, over 500 companies shared the business results they are achieving by working with us. We provide leading cost, performance, and reliability for AI training and inference. This enables us to deliver the best value for AI leaders, like Anyscale and contextual AI, as well as global brands like Verizon. And for highly sensitive data and regulatory requirements, Google Distributed Cloud and our sovereign AI make Gemini available on premises or in country. Our Vertex AI platform makes over 200 foundation models available, helping customers like Lowe's integrate AI. We offer industry-leading models, including Gemini 2.5 Pro, 2.5 Flash, Imagen 3, Veo 2, Chirp, and Lyria, plus open source and third-party models like Llama 4 and Anthropic. We are the leading cloud solution for companies looking to the new era of AI agents, a big opportunity. Our Agent Development Kit is a new open source framework to simplify the process of building sophisticated AI agents and multi-agent systems. And Agent Designer is a low-code tool to build AI agents and automate tasks in over 100 enterprise applications and systems. We are putting AI agents in the hands of employees at major global companies like KPMG. With Google Agent Space, employees can find and synthesize information from within their organization, converse with AI agents, and take action with their enterprise applications. It combines enterprise search, conversational AI or chat, and access to Gemini and third-party agents. We also offer prepackaged agents across customer engagement, coding, creativity, and more that are helping to provide conversational customer experiences, accelerate software development, and improve decision-making. And of course, Google Workspace. It delivers more than 2 billion AI assists monthly, including summarizing Gmail and refining docs. Lastly, our cybersecurity products are helping organizations detect, investigate, and respond to cybersecurity threats. Our expertise, coupled with integrated Gemini AI advances, detects malware, prioritizes threats, and speeds up investigative workflows. This quarter, we were excited to announce our intent to acquire Wiz, a leading cloud security platform that protects all major clouds and code environments. Together, we can make it easier and faster for organizations of all types and sizes to protect themselves, end-to-end and across all major clouds. We think this will help spur more multi-cloud computing, something customers want. Next, YouTube. Yesterday marked a historic milestone, the 20th anniversary of the first video uploaded to YouTube. From that single 19-second upload, the platform has grown into a global phenomenon, fundamentally changing how billions of people create, share, and experience content. Through all this growth, subscriptions are now a big part of the business. We continue to diversify subscription options, recently expanding our Premium Lite pilot to the US, giving users a new way to enjoy most videos on YouTube ad-free. TV is the primary device for YouTube viewing in the US. According to Nielsen, YouTube has been #1 in streaming watch time in the US for the last 2 years. And YouTube now has over 1 billion monthly active podcast users. YouTube Music and Premium reached over 125 million subscribers, including trials globally. And finally, Whimo is now safely serving over 250,000 paid passenger trips each week. That's up 5x from a year ago. This past quarter, Whimo opened up paid service in Silicon Valley. Through our partnership with Uber, we expanded in Austin and are preparing for our public launch in Atlanta later this summer. We recently announced Washington, D.C. as a future ride-hailing city, going live in 2026 alongside Miami. Whimo continues progressing on 2 important capabilities for riders, airport access and freeway driving. Thanks to all of our employees for their work this quarter. It was a great start to the year, and Q2 will be even more exciting. With that, Philip, over to you.
Thanks, Sundar, and hello, everyone. I'll quickly cover performance for the quarter and then frame the rest of my remarks around the progress we're delivering across search, ads, YouTube, and partnerships. Google's services revenues were $77 billion for the quarter, up 10% year-on-year, driven by strong growth in search and YouTube, partially offset by a year-on-year decline in network revenues. To add some further color to the performance, the 10% increase in search and other revenues was led by financial services, primarily due to strength in insurance, followed by retail. YouTube saw a similar performance across verticals. Its 10% growth in advertising revenues was driven by direct response, followed by brand. So let's start with search, where we've seen robust growth in revenues. All around the world, over 2 billion people use search every day to find information, compare products, or shop. And there are more than 5 trillion searches on Google annually. We've continued our efforts to help more people ask entirely new questions, bringing more opportunities for businesses to connect with consumers. And as we've mentioned before, with the launch of AI overviews, the volume of commercial queries has increased. Q1 marked our largest expansion to date for AI overviews, both in terms of launching to new users and providing responses for more questions. The feature is now available in more than 15 languages across 140 countries. For AI overviews overall, we continue to see monetization at approximately the same rate, which gives us a strong base on which we can innovate even more. Turning to visual queries. On the last earnings call, I mentioned the success we're seeing with Lens, where shoppers use their camera or images to quickly find information in ways they couldn't before. In Q1, the number of people shopping on Lens grew by over 10%, and the majority of Lens queries are incremental. Sundar mentioned the significant growth we're also seeing with Circle to Search, as multimodality continues to drive queries across search. Moving to ads. More businesses, big and small, are adopting AI-powered campaigns, and the deployment of AI across our ads business is driving results for our customers and for our business. Throughout 2024, we launched several features that leverage LLMs to enhance advertiser value, and we're seeing this work pay off. The combination of these launches now allows us to match ads to more relevant search queries, and this helps advertisers reach customers and searches where we would not previously have shown their ads. Focusing on our customers, we continue to solve advertisers' pain points and find opportunities to help them create, distribute, and measure more performant ads, infusing AI at every step of the marketing process. On Audience Insights, we released new asset audience recommendations, which tell businesses the themes that resonate most with their top audiences. On creatives, advertisers can now generate a broader variety of lifestyle imagery customized to their business to better engage their customers and use them across PMax, demand gen, display, and app campaigns. Additionally, in PMax, advertisers can automatically source images from their landing pages and crop them, increasing the variety of their assets. On media buying, advertisers continue to see how AI-powered campaigns help them find new customers. In demand gen, advertisers can more precisely manage ad placements across YouTube, Gmail, Discover, and Google Display Network globally, and understand which assets work best at a channel level. Thanks to dozens of AI-powered improvements launched in 2024, businesses using demand gen now see an average 26% year-on-year increase in conversions per dollar spent for goals like purchases and leads. And when using demand gen with product feed, on average, they see more than double the conversion per dollar spent year over year. As an example, Royal Canin combined demand gen and PMax campaigns to find more customers for its cat and dog food products. The integration resulted in a 2.7 times higher conversion rate, a 70% lower cost per acquisition for purchasers, and increased the value per user by 8%. Turning to YouTube, where we saw strong growth in revenues across ads and subscriptions. This week, we're celebrating YouTube's 20th anniversary. We're proud of its leadership as a streaming destination where people come to watch everything they love, from live sports and creator-produced content to shorts and podcasts. Creators are what drives viewership, and on average, they upload 20 million videos a day to YouTube.
I do way more
Our
than
biggest
that.
creators generate a level of fandom and viewer engagement around large cultural moments on YouTube that brands can't find anywhere else.
7,000 videos
During
now,
March
mate.
Madness, brands align not only with clips and highlights from the game, but also with the creators who drive
Lazy
basketball
people.
culture, like Jesser and the Ringers J. Kyle Mann. In Q1, the growth of our reservation-based ads business more than doubled year over year.
I know, mate.
Brands and creators continue to use the opportunities that collaborations and partnerships offer. Toyota worked with Zach King, the king of short magical videos with over 42 million followers, to take over his channel.
Don't mention him.
The creator takeover and accompanying creator ad lifted Toyota's brand awareness by 25% compared
my
to
show and
Control
say
Group,
that.
and 9% compared to the Toyota brand ad. Looking at shorts, engaged views grew by over 20% in the first quarter. We continue to be pleased with the progress we're making globally in shorts monetization relative to in-stream viewing, and are particularly encouraged by the trend in the US. As always, I'll wrap up with the strong momentum we're seeing in partnerships, where customers increasingly recognize the strength and breadth of what Google has to offer. For instance, Roblox is partnering with Google Ad Manager to bring immersive ads to gamers. Gen Z gamers are Roblox's biggest users, and thanks to our partnership, advertisers will be able to reach this audience with ads that blend seamlessly into the gaming experience. We also launched a YouTube Shorts effect to help people release iconic Roblox heads and inspire fans to create content at scale. In closing, I'd like to thank Googlers everywhere for their contributions and commitment to our success, and to our customers and partners for their continued trust. Anat, over to you.
Thank you, Philip. My comments will focus on year-over-year comparisons for the first quarter, unless I state otherwise. I will start with results at the Alphabet level, and will then cover our segment results. I'll end with some commentary on our outlook for the second quarter and 2025. We had another strong quarter in Q1. Consolidated revenues of $90.2 billion increased by 12%, or 14% in constant currency. Search and YouTube advertising, subscription platforms and devices, and Google Cloud each had double-digit revenue growth this quarter, reflecting strong momentum across the business. Total cost of revenue was $36.4 billion, up 8%. Tech was $13.7 billion, up 6%. We continue to see a revenue mix shift with Google Search growth at double-digit levels, while network revenues, which have much higher tech rate, declined. Other costs of revenue was $22.6 billion, up 9%, with the increase primarily driven by content acquisition costs, largely for YouTube, followed by depreciation and other technical infrastructure operations costs. Total operating expenses increased 9% to $23.3 billion. R&D investments increased by 14%, primarily driven by increases in compensation and depreciation expenses. Sales and marketing expenses decreased 4%, primarily reflecting a decline in compensation expenses. G&A expenses increased by 17%, reflecting the impact of charges for legal and other matters. Operating income increased 20% this quarter to $31 billion, and operating margin increased to 33.9%, representing 2.3 points of margin expansion. Operating margin benefited from healthy revenue growth, a moderated pace of compensation growth, and a favorable mix shift towards lower tech advertising revenues, partially offset by a year-on-year increase in depreciation expenses of just over $1 billion. Other income and expenses was $11.2 billion, primarily due to unrealized gain on our non-marketable equity securities related to our investment in a private company, which we noted on our 10-K as a subsequent event. Net income increased 46% to $34.5 billion, and earnings per share increased 49% to $2.81. We delivered free cash flow of $19 billion in the first quarter and $74.9 billion for the trailing 12 months. We ended the quarter with $95 billion in cash and marketable securities. Turning to segment results, Google Services revenues increased 10% to $77.3 billion, reflecting strength in Google Search and YouTube advertising as subscription. Google Search and other advertising revenues increased by 10% to $50.7 billion. The robust performance of Search was once again broad-based across verticals, led by financial services due primarily to strength in insurance, followed by retail. YouTube advertising revenues increased 10% to $8.9 billion, driven by direct response advertising, followed by brand. Network advertising of $7.3 billion were down 2%. Subscription platforms and device revenues increased 19% to $10.4 billion, primarily reflecting growth in subscription revenues. This growth was primarily driven by YouTube subscription offerings, followed by Google One, with growth in the number of subscribers being the biggest driver of revenue growth. Google Services operating income increased 17% to $32.7 billion, and operating margin increased from 39.6% to 42.3%. Turning to the Google Cloud segment, which continued to deliver very strong results this quarter, revenue increased by 28% to $12.3 billion in the first quarter, reflecting growth in GCP across core and AI products at a rate that was much higher than Cloud's overall revenue growth rate. Growth in Google Workspace was primarily driven by an increase in average revenue per seat. Google Cloud operating income increased to $2.2 billion, and operating margin increased from 9.4% to 17.8%. As we scale our fleet, we continue to focus on driving improvements in productivity, efficiency, and utilization to offset the growth in expenses, particularly from higher depreciation. As to our other bets, for the first quarter, revenues were $450 million, and operating loss was $1.2 billion. The year-on-year decline in revenue and increase in operating loss primarily reflect the milestone payment received in the first quarter of 2024 for one of our other bets. With respect to CapEx, our reported CapEx in the first quarter was $17.2 billion, primarily reflecting investment in our technical infrastructure, with the largest component being investment in servers, followed by data centers, to support the growth of our business across Google Services, Google Cloud, and Google DeepMind. In Q1, we returned value to shareholders in the form of $15.1 billion in share repurchases and $2.4 billion in dividend payments. As we announced today, our board of directors declared a 5% increase in our quarterly dividend and also approved a new $70 billion share repurchase authorization.
That's the first time anyone spoke over an earnings.
Turning
That's
to our
a very
outlook,
special
I would
moment
like to
there.
provide some commentary on several factors that will impact our business performance in the second quarter and the remainder of 2025. First, in terms of revenue, I'll highlight a couple of items that we mentioned last quarter that will have an impact on second quarter and 2025 revenue. First, in Google Services, advertising revenue in 2025 will be impacted by lapping the strength we experienced in the financial service vertical throughout 2024. Second, in cloud, we're in a tight demand-supply environment, and given that revenues are correlated with the timing of deployment of new capacity, we could see variability in cloud revenue growth rates depending on capacity deployment each quarter. We expect relatively higher capacity deployment towards the end of 2025. Moving to investments, starting with our expectation for CapEx for the full year 2025. We still expect to invest approximately $75 billion in CapEx this year. The expected CapEx investment level may fluctuate from quarter to quarter due to the impact of changes in the timing of deliveries and construction schedules. In terms of expenses, first, as I mentioned on our previous earnings call, the significant increase in our investments in CapEx over the past few years will continue to put pressure on the P&L, primarily in the form of higher depreciation. In the first quarter, we saw 31% year-on-year growth in depreciation from the increase in technical infrastructure assets placed in service. Given the increase in CapEx investments over the past few years, we expect the growth rate in depreciation to accelerate throughout 2025. Second, as we've previously said, we expect some headcount growth in 2025 in key investment area. As we've disclosed previously, due to a shift in the timing of our annual employee stock-based compensation award beginning in 2023, our first quarter stock-based comp expenses is relatively lower compared to the remaining quarters of the year. In conclusion, as you heard from Sundar and Philip, we're pleased with the progress we're making across the organization, the results for the quarter, and the opportunities ahead. Our success as a company is grounded in our experience driving advancements in deep computer science that enables us to create innovative new products and services for users, businesses, and partners around the world. We have a strong track record of incubating and then building these offerings into new, profitable businesses for Alphabet.
Shares of the S&P.
As we announced last quarter, YouTube and Cloud exited 2024 at a combined annual run rate of $110 billion. And as you heard from Sundar earlier, Whimo is continuing to progress in building on its impressive technological achievements to scale rapidly and develop a sustainable business model. Thank you. Sundar, Philip, and I will now take your questions.
Thank you. As a reminder, to ask a question, you will need to press star 1 on your telephone.
Everyone can comment now. General subscribers can comment on the show. Members can call in. The link's in the chat. Please tap the like button. Subscribe if you want to chat.
And our
join
first
us.
question comes from Brian Nowak from Morgan Stanley.
Stick to the end. We've got a big video premiere coming up at the end.
Thanks for taking my questions.
Don't leave the show.
The first one is sort of the macro advertising backdrop. Maybe Anat, I know it's April 24th, and you call out some factors as you're kind of thinking about the second quarter. Any other factors you're seeing in advertising verticals or regions or categories that could be showing any signs of weakness quarter to date? So we should think through any other changes from typical seasonality in 2Q25 versus prior quarters. Then the second one, on Philip, I think I heard you mention how the volume of commercial queries has increased. Maybe can you just walk us through which of the products are driving that increase in commercial queries? And as you sort of think about the pipeline of search products, are there any others that you're particularly excited about to kind of continue to drive further commercial query growth throughout 25-26? Thanks.
So let me take the first one as well. We saw broad-based strength across ad verticals
yes, Brandon,
in Q1. And,
all my posts on X, Instagram,
we saw it,
everywhere.
Give you a bit of vertical color here.
Discord
Search was led again by finance, due primarily to ongoing strength in the insurance, retail, healthcare, and travel were actually also sizable contributors here to growth. With regard to Q2, we're only a few weeks in, so it's really too early to comment. I mean, we're obviously not immune to the macro environment, but we wouldn't want to speculate about potential impacts beyond noting that the changes to the de minimis exemption will obviously cause a slight headwind to our ads business in 2025, primarily from APAC-based retailers. And maybe to zoom out, I would say we have a lot of experience in managing through uncertain times, and we focus on helping our customers by providing deep insights into changing consumer behavior that is relevant to their business. Examples are auction dynamics, query trend insights on topics like replacement purchases, and so on. So we have a lot of experience in this area. On the commercial query side, look, AI overviews continue to drive higher satisfaction and search usage. And as I noticed, Q1 was really our largest expansion to date for AI overviews, both in terms of launching to new users and providing responses for more questions. That's really the core already of the answer. AI overview sits at the center of your question here. And when it comes to other products, look, I don't want to speculate on this, but we're happy with what we're seeing here on AI overviews. And I'm confident we can expand this to more products over time.
Thank you. Your next question is from Doug Anmuth from JP Morgan. Your line is now open.
Great. Thanks for taking the questions. Phil, maybe just to go back to AI overviews for a moment, can you just tell us how we should think about the 1.5 billion AI overviews users just in terms of breadth of rollout? And I know you're saying monetization at approximately the same rate, but what does that mean in terms of click-through rates and conversion? And then, Anat, just curious if there have been any changes to Google's approach to durably re-engineering the cost base since you've joined, and if macro weakens and we see more of a slowdown, would you expect to find additional opportunities to cut back more on costs? Thank you.
Yeah, look, on the ads in AI overviews, late last year, actually, we launched them within the AI overviews on mobile in the US, and this builds on our previous rollout of ads above and below. So this was a change we have. But as I talked about it before, for AI overviews overall, we see the monetization at approximately the same rate, which gives us a strong base on which we can innovate even more. So I'm very happy with this. I don't think this is the moment to go into the details of click-through rates and conversion and so on. But overall, we're happy with what we're seeing.
And to your question on our approach to productivity and efficiency, it hasn't really changed. I've mentioned my approach and our approach as a company on at the end of 2024. And we're still focused on driving efficiency and productivity throughout the organization, both in our operating expenses and in our CapEx. I've mentioned some of these during my prepared remarks. But certainly this helps us as we think about the investments we need to make in innovation to drive long-term sustainable growth profile for the company. We're able to repurpose some of these efficiencies into these investments.
Coming up next,
as well as you think about the increase in CapEx we've seen over the past several years and what we're investing this year, this will put additional pressure on the income statement in the form of depreciation. So we're working hard to try and offset some of the headwinds, as well as within the CapEx investments themselves. $75 billion. We're looking at how do we make sure every dollar is used efficiently. We have a highly rigorous process to determine the demand behind it and then the allocation of the compute associated with our technical infrastructure investments, ensuring that we're utilizing that appropriately and that we're highly efficient with everything we're doing. You've seen some of the announcement and some of the changes, but we're focusing on continuing to moderate the pace of compensation growth, looking at our real estate footprint, and again, the build out and utilization of our technical infrastructure across the business.
Google is just under 4% of the S&P 500.
Thank you. Our next
on
question
the market cap
comes
weight,
from Eric
VOO.
Sheridan from Goldman Sachs. Your line is now open.
Thank you for taking the questions. First, maybe for Sundar, when you look across the consumer AI landscape today, how are you thinking about continuing to drive differentiation for Gemini as a platform through the lens of usage, utility, or putting product innovation at the forefront of driving consumer habits? And then the second one, maybe for Anat, if the macro environment were to change and become more downwardly volatile, how should investors think about the investments that are must make this year, almost fixed in nature, versus where there might be more flexibility to alter the investment
Coming up after this, a must-watch video.
If the macro environment
S&P
were to worsen.
500 warning to pop.
Thanks, Eric. Obviously, it's an exciting moment on the AI front. I think the foundation for everything is obviously the frontier model progress we are seeing, and particularly with 2.5 Pro and Flash, I think we're well positioned. We are seeing tremendous reception from developers, enterprises, and consumers too. And obviously, we are delivering consumer AI experiences across our product portfolio, including, the primary way people experience it is obviously in search with AI overviews and very early days with AI mode, but that will be a consumer AI forward experience, and we are already seeing very positive feedback. Queries are, people are typing in roughly 2x longer queries compared to traditional search. So there's a lot of excitement there. And in the Gemini app, which you asked about, we've really seen increased momentum, particularly over the last few weeks as we've rolled out not just the newer models, but we are seeing users are really responding well to all the innovation. Gemini Live, which is based on Project Astra, has been very well received. Deep research, I think, based on 2.5 Pro is SOTA, and that's been well received. And Canvas, we've had a lot of traction as well. And so we are definitely investing more. We have recently organized ourselves better to capitalize on this momentum, and I'm excited about our roadmap there.
And on the investments this year and overall, should there be any macroeconomics changes, as I said, we're still planning to invest approximately $75 billion in CapEx this year. We do see a tremendous opportunity ahead of us across the organization, whether it's to support Google Services, Google Cloud, and Google DeepMind. Recall I've stated on the Q4 call that we exited the year in cloud specifically with more customer demand than we had capacity. And that was the case this quarter as well. So we want to make sure we ramp up to support customer needs and customer demands. Having said that, we're investing in long-term and we're investing in innovation. That's the essence of our business. And we want to do it in a responsible fashion. So you've seen us over the past couple years, and we're continuing to do this, and you're seeing this in our results, drive efficiency and productivity throughout the business. And, we've announced things such as consolidation of teams, which helps not just with cost, but with velocity and speed. We're able to get things to market faster. So that's one of the areas we're focused on. You heard from Sundar the last couple of calls on just a rapid pace of innovation we're bringing to the marketplace. So the way we're doing this across the business to drive productivity and efficiency should help us have a more resilient organization irrespective of macroeconomic condition. But certainly we don't ignore that. We always look at what's happening outside the organization as well as inside, but invest appropriately to drive both the short-term growth as well as the long-term growth.
Thank you.
Thank you. Our next question comes from Ross Sandler from Barclays. Your line is now open.
Great, thanks. One for Sundar, one for Philip. Sundar, it was disclosed this week in the trial that's going on that Gemini has 35 million DAUs, and just curious, that number obviously trails ChatGPT by a pretty wide margin. Could you just talk about the strategy to get that DAU figure much higher that you guys are deploying? And then Philip, just curious to hear what you're seeing on the brand advertising side at YouTube in 1Q and into early 2Q. Are brands holding up relatively well, like direct response, or are they starting to react to some of these macro jitters that we're all experiencing? Any thoughts there? Thank you very much.
Thanks, Ross. I think I touched upon this to Eric's question as well, but we are definitely, I think, there's been a lot of momentum in terms of product features we've been introducing, and we are definitely seeing reception, including increased adoption and usage based on those features. So I think we are in a good positive cycle. The recent advances on the model frontier, by many metrics, I think we have the best model out there now, and I think that's going to drive increased adoption as well. And again, I would reiterate, people are using. Obviously, we have 1.5 billion users through AI overviews interacting with AI in a deep way, in a very engaged way. Obviously, we are innovating with AI mode. And, we have a very exciting roadmap ahead with the Gemini app as well. So across the board, super excited about what's ahead.
And on your brand question, look, brand and, by the way, also direct response had a very solid growth in Q1. Brand advertisers really enjoyed cultural moments we had, like Coachella, for example, or March Madness. We had strong contributions overall from the finance and retail verticals in Q1 on this side as well. The operating metrics for YouTube were strong in Q1. Watch time growth remains robust, particularly in key monetization opportunity areas such as Shorts and Living Room. It's also, by the way, nice to see the strong position of our creators who obviously benefit from the brand piece, which gives us a lot of confidence when we look at it more closely. And on the Q2 side, I think I mentioned it's too early to really comment on that.
Thank you. Your next question is from Mark Smolik from Bernstein. Your line is now open.
Great. Thanks for taking my questions. Sundar, appreciate the color on Gemini deployment across kind of the 15 products with 500 million users or more. It would be great to hear more about where you're seeing the most usage and deployment of Gen AI internally at Google. Perhaps whether the capabilities, are they in a place today in terms of either supplementing or augmenting the workforce? And then just to build on that earlier AI mode type questions, appreciate AI mode has 2x longer queries than traditional search. But any color you can share perhaps on how AI mode behavior differs from how consumers are using the Gemini app? Thank you.
Please wait to the end. I've got a big premiere coming up for you. You can't afford to miss this one.
This has been
the S&P bubble I'm predicting, even though I'm fully invested in it.
Excitement. Both
this
because I think we are, the early use cases have been transformative in nature, and I think this still feels like early days and long ways to go. Obviously, I mentioned a few months ago, in terms of how we are using AI for coding, we are continuing to make a lot of progress there in terms of people using coding suggestions. I think the last time I had said the number was like 25% of code that's checked in. It involves people accepting AI suggested solutions. That number is well over 30% now. But more importantly, we have deployed more deeper flows. And particularly with the newer models, I think we are working on early agentic workflows and how we can get those coding experiences to be much deeper. We are deploying it across all parts of the company. Our customer service teams are deeply leading the way there. We've both dramatically enhanced our user experience as well as made it much more efficient to do so. And we are actually bringing all our learnings and expertise in our solutions through cloud to our other customers. But beyond that, all the way from the finance team preparing for this earnings call to everything, it's deeply embedded in everything we do. But I still see it as early days, and there's going to be a lot more to do. On AI mode, look, I think we are just leaning in on the early positive feedback. As we scaled up AI overviews, it's been one of our most positive launches, but it's been clear people have wanted even more of it. And so, with AI mode, we are bringing our state-of-the-art Gemini models right into search, and I mentioned people typing in longer queries. There's a lot more complex, nuanced questions. People are following through more. People are appreciating the clean design, the fast response time, and the fact that they can kind of be much more open-ended, can undertake more complicated tasks. Product comparisons, for example, has been a positive one, exploring how-tos, planning a trip. So those are the kinds of early feedback we are seeing. And, I think we are obviously really focused on improving the product across all of AI mode, AI overviews, and the Gemini app, and we are seeing positive user traction as well.
Thank you. Your next question is from Mark Mahaney from Evercore. Your line is now open.
Okay, thanks. One for Anat and one for Sundar. Anat, getting back to a question I think that Doug was asking earlier, you just put up record high or multi-year record high margins for both Google Services and for Google Cloud. You talked though about depreciation expenses accelerating rapidly throughout the year because of all the investments you've already you warn people about. Back in the September quarter, you seem relatively confident that you had enough levers to kind of offset, kind of rising infrastructure costs. Was that still your, 6 months later, is that still your view that you've got enough levers that even with the rising infrastructure costs, there's enough in there to kind of counterbalance that? And then just briefly on Whimo, that continues to rise aggressively, the numbers, Sundar. The long-term business model for Whimo, is there a reason to make a decision on that soon, or have you already made a decision of whether this is a long-term licensing model, or you really want to run this as a standalone ride-sharing delivery, autonomous vehicle business? Thank you very much.
Thanks. So on your first question on profitability and what levers do we have, and do we still have levers to pull? First, I think every organization can always push a little further. I don't view productivity goals or efficiency as an episodic kind of project-based effort, but rather a continuous effort that when you get to a certain place, you push a little further. Having said that, we do have significant investments we're making across the organization, and we have been making them for the past several quarters. And we've been able to do it because we were able to find efficiency to fund those investments across the organization.
Just a few
those
minutes.
are
We've
for
got a world
products and
premiere.
services
We cannot afford to miss
drive
it.
long-term growth for the company. So while we're trying to offset as much of the headwind associated with the increase in infrastructure costs, it will become more difficult. As I said, the depreciation will accelerate. We had about a 31% year-over-year growth in depreciation this quarter, and it will be higher as we go throughout the year. So think about that kind of as a headwind that we have to manage against. But we're continuing with pushing across the organization, leveraging, Sundar mentioned the use of AI and kind of an AI-first Google across several of our functions to help us manage a larger scope of work using our AI agents and AI tools. As Sundar mentioned, we did leverage it in preparation for the earnings call, and we're leveraging across several functions. So there are opportunities, but there are also great opportunities for investment, and we want to make sure that we make room to make these investments to drive long-term growth and ensure we have a very resilient long-term growth profile for the company.
And Mark, thanks. I think this is probably the first question I've got on an earnings call on Whimo, so thank you, and I think it's a sign of its progress. Look, the thing that excites me is I think we've been laser focused and will continue to be on building the world's best driver, and I think doing that well, really gives you a variety of optionality in business models across geographies, etc. It'll also require a successful ecosystem of partners, and we can't possibly do it all ourselves. And so I'm excited about the progress the teams have made through a variety of partnerships. Obviously, a highlight of it is a partnership with Uber. We are very pleased with what we are already seeing in Austin in terms of rider satisfaction. We look forward to offering the first paid rides in Atlanta via Uber later this year. But we are also building up a network of partners, for example, for maintaining fleets of vehicles and doing all the operations related to that. With the recently announced partnership with Move in Phoenix and Miami, obviously partnerships with OEMs. There are future optionality around personal ownership as well. So we are widely exploring, but at the same time, clearly staying focused and making progress, both in terms of safety, the driver experience, and progress on the business model and operationally scaling it up.
Okay, thank you very much.
Thank you. Our next question comes from Ken Goralski from Wells Fargo. Your line is now open.
Thank you. Two, if I may, please. First on AI-powered search. You have a number of AI-powered search interfaces, including three most prominently, AI Overviews, AI Mode, and Gemini. In the future, should we think of these as distinct experiences or that will be long-lasting, or more experimental now, and Google will eventually focus on one approach going forward? And the second one is more on the financial side. You continue to experience very healthy gross margin expansion. We see the tack, sure, but Anat, you also talked about the offsetting depreciation expense. Could you talk about beyond those two buckets where you're seeing the real savings on the COGS line and driving that gross margin expansion, and maybe even how we should be thinking about that going forward? Thank you.
Okay, now maybe on AI-powered search and how do we see our consumer experiences. Look, I do think search and Gemini obviously will be two distinct efforts, right? I think there are obviously some areas of overlap, but they're also, expose very, very different use cases. And so, for example, in Gemini, we see people iteratively coding and going much deeper on a coding workflow, as an example. So I think both will be around. Within search, I would think of AI overviews is scaling up and working for our entire user base, but an AI mode is the tip of the tree for us pushing forward on an AI forward experience. There will be things which we discover there which will make sense in the context of AI overviews. So I think will flow through to our user base. But you almost want to think of what are the most advanced 1 million people using search for, the most advanced 10 million people, and then how do 1.5 billion people use search for? And, we want to innovate. And so I think this allows us to do that. But the true north through all of this is, user feedback, user satisfaction, user experience. And so that will determine where this all works out in the future.
And to your question on gross margin, a couple of trends to highlight there. And I've mentioned this in the prepared remarks. You've seen improvement in tech that's really driven by the change in revenue mix with a continued search growth, and then network revenue declines. Network revenue has a much higher tech rate. So that mix is helping us from a gross margin perspective. So think about that as well. Now, we do have depreciation for technical infrastructure hits in primarily in two places in the income statement. One is in other costs of sales, and the rest is in R&D. So it is in that line item that's impacting costs of sales. Now, we've had some efficiencies there, and I did mention the improvement in our overall cost of or headcount growth and compensation, kind of moderating those growth. So that helps us as well more than offset the depreciation increases in Q1. But as I mentioned, this number will be higher in the coming quarters. Recall, we said approximately $75 billion in CapEx, which is up from 55 or just over 50 billion last year. So there is expected to be quite a significant increase in depreciation.
Thank you. And our last question comes from Ron Josey from Citi. Your line is now open.
Great. Thanks for taking the question. Philip, I wanted to touch a little bit more on your comments around direct response in YouTube. I think it's been improving and been a driver over the past couple of quarters. I'd love to hear more just about what's driving that. Is that the demand gen and integration with PMax, or are users perhaps more involved on direct response now that Shorts usage is rising? Would love your thoughts there. Thank you.
Yeah, I think there's a lot of different factors. Mostly we continue to help our customers really using our AI-powered tools. You mentioned a few of them to drive performance. That's a very big one. As I mentioned before, we're also happy with the progress we're seeing on Shorts and closing to the monetization gap here to the overall business, which is actually really nice to see, especially in the US. So we're very happy with that. Yeah.
And, I'll just chime in to say YouTube just celebrated its 20th birthday. And, we now have more than 20 billion videos on YouTube, and we get 20 million videos uploaded every day. So I think it's a tremendous platform. And thanks to all the creators and users who have supported us there over the years.
You're very welcome.
Great. Thank you.
Bloody right.
Thank you. And that concludes our question and answer session for today. I would like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again on our second quarter 2025 call. Thank you and have a good evening.
There you go. What a great call that was. Fantastic. Right, I'm going to bring my panel back in. Now, guys, we've got 270 of you left with me at the end. Please stick with me just for another couple of moments because I've got a really important world premiere you cannot afford to miss. This is going live in just a couple of minutes from now, the S&P 500 bubble warning. It's a very, very important video. No one could be more bullish on the S&P than me. I'm all in with my cash, my margin, you name it. I'm all in. However, more and more people are buying VOO now than ever before, which is the one that I'm investing in. And people are buying it without measuring the value of each individual stock. Everyone's just buying VOO. It's become extremely popular. And that comes with a warning. Because if everyone just keeps buying and buying and buying without valuing individual stocks, you end up with a giant bubble. And that is very, very important to understand. And you can avoid that by doing what I've been doing, going all in at the bottom and just literally buying for the future prices. So if things go up 20, 30, 40% next year, doubles and God knows what else, it doesn't matter to me. I can afford a 20, 30, 40, even 50% pullback because I bought at the bottom. It's why I'm not going to buy now. I'm all in. I've bought everything I need to get me to $1 million. Don't chase the market. Those that will just keep buying and buying and buying of this ETF, they could experience a bubble. And I explain it in this live video coming up next. It's a world premiere and you've never seen the video before, and it's going to go live in just a couple of minutes. Let me go to my panel, and if you want to call in, let me give everyone the link. You can have your say. I want to thank my panel for waiting so patiently in the chat. There is, whoops-a-daisy. There is the link if you want to call in. You have to be he won't let me post my own link. What's going on? There you go. Just talking how wonderful YouTube is, and it wouldn't let me post my own link. There you go. You can call, if you are a member, you can call in. Let me just unmute everybody. Okay, you are now unmuted. Unmute your microphones. If you want to call in, have your say, please feel free. I'm going to put, in fact, I'm going to leave you there. Let me just give everyone the link just in case you can't see the pin at the top. There is a pin at the top, but this is the link to the next event. It will take you there automatically, or click on the link. It starts in just 6 minutes from now. So Vaz, sorry, not Vaz, I beg your pardon. Saab, come to you first. Happy what you just heard? State of the economy, state of Google? What do you think?
The state of Google is absolutely great. Economy is a bit, we don't know where the economy is yet. We're having a rise right now with what news?
Exactly. I'm so glad you said that.
Trump already said that he's not going to fire Jerome, and everybody thinks that's enough for a bull market, which it isn't. VIX is still down. Yep. The economy goes up when the VIX is above 50, and it's going upwards to the right. But be careful, folks. Not trying to burst anybody's bubble here. Be very, very careful right now. We're in murky waters, and I've posted a couple of times. So just hold what you got. Get ready to buy when it drops. I think you might go to April 2nd levels before it comes down. I think I would go up to that level, and then it'll have its final drop, I think. So that's just my point of view. So I'm not an investment advisor. You know the crack. So
I think that's great you've shared that, because I echo that sentiment exactly. It's why I trimmed today. Just I didn't sell my lowest ones. I want to keep those in the bag. Those I bought a year ago, all the ones at the nice low levels of the low the 400 lows. I want to keep all those forever. The ones that are at 520 and 30 that I bought near the top there, leaving those because they're out of the money. There's no point selling for a loss. I sold the ones that as I was buying on the way down, I took them back to the shop, got my jeans refund. You know what I'm talking about? Took the ones I paid $50 and kept the ones I pay for 25 because I can't keep all the shares. Got to manage your risk, trim those off, and waiting for a bit of a pullback, which I reckon will come at some time during the night. I will set a limit order to buy $1 under my average. And if I wake up in the morning and I've got 12 more shares under my average and my average is down a bit more, I'm happy. And in fact, with the fact I sold where I sold, I'll end up with nearly a free share, which will be perfect, exactly what we want, right? But I do think it's there's no news. There's nothing happened.
I agree agree with you, Martyn, wholeheartedly there. Like you did exactly the right thing, you know, and you've rebalanced, and you've got your gunpowder, your dry powder, you know, in case it goes down, you get some more. Perfect strategy. I love it.
Yeah, thank you, mate. I appreciate you saying that. Jonathan, what's your thoughts? I know you're a tech investor.
Yeah, very good, actually. I'm really happy to hear they're moving to inference now for AI. That's going to be really, really good for a lot of my investments that are more focused on the inference side of things. Nice that they mentioned NVIDIA during that as well.
Yes,
I
like that.
Watching their stock, it didn't really move much. Amazon went up 2% so
Did
far.
it?
So they're going up, interestingly enough. But for me, I think it shows that I don't think Wall Street still understands the tech sector yet. I don't think they can price in just how big AI is going to be in the future.
Well, yeah.
And for me, it feels undervalued. I mean, if it does drop, it drops. It could go further down. I'm okay buying these prices because 10 years, 20 years time, that's my horizon.
Exactly. I feel the same.
But it's going to be. I think this could be the start of a very good earnings season. To be fair, I think with everything that's happened with the American economy, with Trump saying stuff, I think that we've got this idea now that everyone is going to fail because it's the sentiment. It's all about sentiment. And I think we're going to hopefully see that sentiment reverse with these earnings, beating. But, as Saab was saying, I think until trade deals are sorted out, until we have some clarification around tariffs, I think the market's going to go sideways.
Yeah.
It's just going to go sideways for that 90-day period until we have some more clarification around around trade.
It's okay to have a core position, but once you start leveraging, using your last, emergency funds or your margin or whatever, I'm all in with my cash because I've got my income from YouTube. So I don't have money in the bank. I'm all in with my cash. I'm all in with my margin, but I still have to have a buffer, for a drop. That's why I've trimmed back the ones I was buying on the way down, trying to make sure I bought the bottom, which is what I ended up doing, and buying bigger and bigger. And as it popped up, I just sold a few on the way up just to bring those back into balance, as Saab was explaining. But yeah, I think we're going to get another drop, and I want to be ready for it and bring that average down. Like what you just said, we're investing for 10 years, 20 years out. It's not where we are today. It's an important lesson, actually. It's taken me 4 years to really get the grips of this, still being down just 32,000 now from 60 plus. So it's a big turnaround. It would be so easy just to go, I want to make that 32 grand tomorrow, so I'm going to sell everything and buy some really fast moving crypto. And then I could end up losing it all. Just got to stay the course, have the patience. The field is plowed. The seeds have now turned into seedlings, and the seedlings are starting to turn into trees. A little bit longer this summer, there'll be my first harvest of fruit, and that's what it's all about, right? Well, guys, we've got 60 seconds before my premiere. I made this, and I really want people to, listen to this because, no one could be more bullish than me. Let's be honest. I'm always in the game, investing everywhere I can. The S&P 500 is my, number one go-to stock, if you like, ETF. But there is a bubble, and like you guys have said, don't chase it. You're bullish. You like what you see, but that doesn't mean to say you just keep buying on the way up. We've been given a gift. This is the one good thing I like what Trump's done, whether you like him or not. He gave everyone the chance to buy, stocks from a year ago. And if you took that opportunity, you are loving it right now. But just don't chase it on the way up. You bought it on the way down. Wait till next payday, get a bit more, buy it again on the next dip down, and you'll be all right a year from now, maybe even 6 months from now. So final thoughts. We've got literally a few seconds to go. Jonathan, give me your final thoughts, mate.
I think it's going to pump, and then, as you say, maybe it might dump.
Indeed. Saab, final thoughts from you, mate.
Right there. I listen to all. Trust a few, but always paddle in your own canoe.
Oh, I like it. I'll have that one. I'll put that on my show. I'll put that on a t-shirt and I'll sell it to you for 50 quid. All right, fantastic. Let me go over to this. So I'm just going to mute that audio. This is what's happening now. My world premiere is about to start. I'm going to give you the link again. Please do watch it all the way through. It'll help the channel. It'll put out a very responsible, I think, message. We see Google going down now. I want everyone to watch this and watch it again and watch it again, because as you heard, we like to earn money on YouTube and spread the word. And the more money I earn, the more S&P I buy. And that's good for everyone. You see? So you're helping yourself by watching my video. What can I say? All right, there you go. The video's about to start. I'll see you back in the morning for the opening bell and more earnings coming up. Eli Lilly, we've got SPCE, we've got Lucid, Hood, Mobix, and Vertical Aerospace coming up. That's it from me, Jonathan Saab. Thanks for calling in, guys. Really appreciate your company. It's nice to meet you first time, Jonathan. Call in again. I'd like to get to know you more, know more about what you do and all the rest of it. Love to hear from you. Thanks for being a supporter to the show. Appreciate it. There you go. Right, the premiere is about to begin. I'm going to end this stream. The link is in the chat. It's pinned to the top. It's also in the description of the video right at the top. That's it. I'll end the show. Join me on the premiere. Watch it through. Share and like. I'll see you back in the morning for the opening bell. That's it from me. It's 30 seconds away. I'll say goodbye. Click above here. No, down here and down here. And I'll put the link later on when this is rendered and then all processed or stuff like that. Anyway, till then, take care of yourselves and each other.